Hi, this is Dave, and welcome to the weekly market recap, closing out the week for, I guess it would be Friday, May the 9th, 2014. So I haven't posted out a video in a couple of weeks, and the reason is that I first of all I've been quite busy, and second of all, I really haven't had much to talk about in these markets. The markets have been pretty sideways and choppy and not all that interesting. I haven't really been doing a lot of trading over the last couple of weeks just because of the market conditions from a swing trading basis. So on that note, just a quick update on a couple of upcoming things, some housekeeping items. We're hosting a seminar, an in-depth seminar. It's a full day seminar with David Cox. David Cox is going to be talking about what every investor ought to know now, and specifically how to create a systematic, organized market approach to confidently take back your financial future today. It's going to be a really good seminar for anyone who wants to learn about quantitative, fundamental, technical analysis and how to put together an entire investing approach to take control of your life finances and your financial future. So it's going to be a really good seminar. I urge you to register before the early bird special. The early bird special cuts off on, let me just see here, I believe it is May the 18th. If I'm not mistaken, that would be on Sunday, May the 18th. So you'll want to register before then to get the early bird special pricing. And that's all going to take place on May the 31st. So it's the weekend after the Victoria long weekend. Okay. So look forward to seeing you there. We have several people already registered. In order to register for the event, just come to, let me just change this tool here. Just come to markettradingconcepts.com here. And you can either click on this, this front page. This will link you over, or you can come to upcoming events and come over to what every investor ought to know now. And that will take you to the sign up page, and you can just click on register for event. The second thing I just wanted to bring to your attention is if you go to csta.org, we have an upcoming CSTA meeting, an Oakville chapter meeting on next Wednesday, May the 14th. So if you come to the main page of the CSTA and you come to the upcoming event, you can see the Oakville region chapter. You can just click on this link here. If you're not a member, it's about $20 with tax to attend the meeting. Well worth it. If you want to join the CSTA, I donate my time to run the meetings every month because I believe in the educational value that the organization provides. It's a great organization, and a lot of professionals donate and give of their time in order to teach what they know. So it's a great organization. There's a lot of opportunity to network and to learn from professionals. Next Wednesday, we have Jennifer Radman, and the president of the CSTA, William Chin, will be introducing her, and they're going to talk about quantitative and fundamental analysis. And there's going to be a lot of great information provided there. So I urge you to come out to the meeting if you want to network, meet with other traders and investors in the area, and learn from a couple of top professionals. So that's taking place next Wednesday, May the 14th in Oakville. It is in the Queen Elizabeth Park, room C094. You'll get all the details once you register. So now that we've taken care of some of those house cleaning items, let's move over to some analysis. Let's start out with the Dow on the daily chart, as we usually do, the Dow futures. Now the Dow futures, I mean, you can look at the DIA, or you can just look at the Dow Jones Industrial Index. They're all fairly close. They all track the same. And if we just kind of look at where we are in these markets, we've got a bit of a divergence between the Dow and the other indices. I mean, we're overbought here. If you look at the stochastics, we're basically overbought. You've got a little bit of a divergence happening here in terms of, price and momentum. But essentially what you really have here is we're stuck in this range here, and we're in a period of seasonal nothingness. I mean, seasonally speaking, the market usually does this at this time of the year. But having said that, the market usually does this, slightly, sideways to slightly down. But having said that, it's interesting how we keep retesting and retesting and retesting and retesting these highs. Now, if you look at the Dow looks quite strong, but the other indices are not really confirming. So let's take a look at the, I just want to jump over to the Dow, the transports. So the transports are doing the same thing. They look strong and they're sideways, but they're, they keep pushing towards the high end of the range. But if you look at, let's look at the S&P. I believe the S&P looks fairly strong. The S&P is doing the same thing, right? The S&P is doing the same thing here, so it looks a lot like the Dow. But if you take a look at the NASDAQ is really not cooperating. Just delete this. The NASDAQ's just really going sideways, and it's nowhere near the top of its range in terms of its relative highs. Even the MACD is below its zero line, as opposed to the Dow, which is above its zero line. Okay, so let's go back to the NASDAQ. So the NASDAQ is not confirming what the Dow is doing. It's just sideways. And then if you look at NASDAQ is weak, and look at the Russell. The Russell is also weak, and it is close to some of its relative support levels down below. You can see there's a lot of congestion around this area, and it is close to support down below. So you've got two indices, the Dow and the S&P, that are bumping up against its relative highs, and you have two indices that are the NASDAQ and the Russell that are not really doing anything. So you really need to see how that's going to resolve itself. I'm not really expecting a lot out of it, but I am watching. The upside surprise would be the Dow and the S&P to break out to new highs, and to see if the other two indices are going to follow suit. So I'm just keeping an eye on that. But having said that, there's really no actionable trading plan to follow. So let's jump into some other markets. I'm going to jump over to crude oil. So crude oil just keeps playing around. Let me delete some of this stuff off here. Crude oil just keeps playing around this 101.32 level, and it is really not doing a heck of a lot either. I think it's more bullish than bearish, and you've got a developing, you've got this sort of trend line. It's not really clean, but it's still in a macro uptrend. You've got a momentum shift potential here. You've got the stochastics are bottoming and rolling back to the high side, and the MACD is holding the zero line here. So you've got some interesting, things happening from that perspective off of this relative support area. But you can see it just came up and it tagged 101.32 and almost clean to the level, and then it came off. So, all we're really doing is, we're just playing around this level here. And at this point in time, this market to me is just sideways. And let's take a look at natural gas. Natural gas, is that sideways or what? You're really going sideways here as well. And you're just playing around some of these key levels. Now you're just below 458.9. Not really a lot to talk about there. Let's take a look at some metals. Take a look at the gold. The gold is, the same story, right? You've got the support level here, and you just keep playing around that support level, and you're sideways. There's been talk. I know David Cox has been talking a lot about the coming commodity bull, and we're above the lows, but we're not really seeing any trending yet. So I am keeping an eye on that. That looks interesting. Let's take a look at silver. Silver is at its lows, and you can see there's a sort of a huge support level. Huge support level down here. I'm actually going to mark it. I'm going to mark it this week. I'm going to make this a little bit weightier. And boom. There you go. You've got a support level somewhere around, get rid of these fibs, somewhere around $18.95, $19, somewhere around there. You've got this zone here. It's actually probably a zone of support, between these levels. So, silver's really not doing a heck of a lot, and I wouldn't really be all that interested in the long side until we could get really a break above, that trend line there. So let's take a look at, let me delete some of this stuff off here. Let's take a look at the copper. So copper looks a little bit more bullish than bearish, but you know, it's really just sideways. It's really just sideways as well, and you've got this I wouldn't really call that a wedge, but well, I guess you could call it, technically I guess you could sort of call that a wedge. You've got this sort of happening here. Yeah, that looks like a pretty decent wedge. So I'd be looking for a break either way of that wedge, but you know, until and if that happens, it's not all that interesting. And especially in terms of where momentum is. Although the MACD has crossed the zero line, so that's interesting. If it breaks out to the high side. Let's take a look at some let's take a look at some currencies. Let's take a look at the dollar index first. So the dollar index was holding on. You can see this pretty strong support level here around 78.85, and then you've got, let me delete some of these fibs. And then you have 79.28. This is a pretty strong support zone. You can see we kind of spiked down into the lower end of that support zone around 78.85. You can see the volume picked up here, and momentum is shifting back up to the high side. You've got sort of a I don't know if you could call this, if you could call that a positive divergence, but it came off there with a bullish hammer, and then you had a wide range bar back up to the high side. So we're still holding on to some of these massive support levels here, but you're still really stuck in this major range. You're just kind of ping-ponging back and forth. Nothing all that significant. It's just I always talk about this breakdance fight back and forth. So let's take a look at between this and the euro. Let's take a look at the euro. The euro is below some of these key levels. Let me get rid of these fibs. And this trend line is sort of relevant still. But we're really just sideways in the euro here. And I think you can see the theme here. These markets are not all that interesting right now at all. In fact, I probably could have, I probably didn't really need to do a review of the markets, but it's been so long. It's been a couple of weeks now that we really need to get our heads back into the markets, because as soon as you decide that there's nothing to do in the markets are poised for a move. So we're building up energy here to make a move. We're building bases. We're building bases. We're building, sideways consolidation. We should be ready to make a move at some point. So we need to start keeping an eye on this again. We've got, 139.63. You can see we came into this level again here, and now we found a little bit of support at this level. Now, 136.83 is probably in play somewhere down here. So I'd be looking for this to be the next level to come into, and are we going to go this way? Or are we going to go that way? Depending on the strength in the dollar index, we could come down into some of these levels here. So that's kind of what I'm looking at. I'm a trend trader, so I don't really look to just, trade from here to here and then from here to here. I like to see nice trends, so I won't be participating in any of these moves. Let's take a look at the British pound. So the British pound is, I would consider that a pretty decent trend. So, pullbacks in the British pound may be interesting if we can find decent areas. If we can find decent areas to trade, they might be, something to look at. We don't really have super clean trend lines here, but they're not bad. They're not bad. These are fairly shallow, fairly shallow pullbacks. So maybe let me extend this right. Maybe a pullback into this trend line. We're still holding the 5 ATR 20, which is our kind of line in the sand for trending, and that looks sort of interesting. Maybe a deeper pullback with the stochastics resetting themselves like they did in this area here. If we could get, this situation here, then it might be worth it. If we had this situation, it might be interesting to look at a trade somewhere down there in the British pound, if and when that happens. Let's take a look at the Australian dollar. The Australian dollar, if you look at the Australian dollar, it's looking sort of interesting because it's starting to trend. It has an intermediate trend here, but you've got a bit of a developing cup pattern here. So a breakout out of this base here would bode well for commodities. But at this point in time, I don't really have anything all that interesting on it. Let's take a look at where the fibs are in relation to this high and low. So you came into a 78.6. So, at this point in time, I might be looking for a retest of some of these highs at some point if we can get above, this level here around 90, let's call it 94 cents, then a retest of 96 cents may be in order. Let's take a look at the USD. Let's look at the Forex market now and look at the USD CAD. So the USD CAD has been, it hit $1. Let me just delete some of these fibs here. The USD CAD hit $1.12, $1.13, somewhere in there, and now it's just been falling off, and it just broke this 5 ATR 20, and it's trading around $1.09. So at this point in time, it went from an uptrend to from a market structure basis. It put in sort of a double top here. This should actually be red. Let me just change this to red. It kind of put in a double top here, and you had a bit of a divergence here, right? And then that spelled the top, and then you can see now in hindsight it makes sense, right? Came down, put in a low, it broke these higher lows, and it put in a lower low, lower high. So this is not looking very promising for the USD CAD. We may continue this intermediate downtrend. So it's hard to tell, but the structure here, looks like it shifted from an uptrend to an intermediate downtrend. Normally when I see this kind of stuff, I look for what I think are going to be the relevant highs and lows, and I look for what might be a turning point in the fibs. We could come into, we've got a nice congestion area here, which lines up with the 50 to 61.8% zone. So if we come into, I'd be looking for support around $1.06 to $1.07 in the USD CAD. That's what I'd be looking at. We do have an intermediate momentum shift here. So in fact, if we can get a push up higher and get overbought in the USD CAD, that might be a good area to look at, shorting for a move into here. I'm not recommending that. I'm not going to trade that, but looking at if you've got some US dollars, if we come into here, that might be a good area to unload them. That's kind of what I'm thinking. And let's take a look at the bonds. So the bonds, I think, are in a period of seasonal strength. I'm going to have to double check that. And let me delete some of these fibs. The bonds look strong. So it's kind of, you would expect either the bonds to go higher and the stocks to go lower, or vice versa. And the bonds are looking strong again, which would bode well for low interest rates. Everybody's been talking about looking for interest rates to go higher, but they have not, and the bonds have been going higher. So let's take a look at the 10-year. That was the 30-year. Delete some of this crap off. We're basing, but we're looking for a possible breakout of these highs here. And if we look at where they are relative to this last major move from a fib perspective, you're finding resistance right at the 618. So a break of the 618 would probably bring us into the 78.6. So I'm going to be watching that. And then if you look at the yield curve, if you look at the interest rate based on the 10-year, you can see we're nowhere near this 3% level, and in fact we're quite below that, around 2.6%. So I mean, this is really the inflection point, in my opinion, to see interest rates go higher if we can break above that. So for the time being, it looks like we have higher bonds and lower interest rates. So that being said, I'm going to wrap up this video. I hope to see you out at one of the two interesting events that we have coming up. We have the CSTA Oakville next Wednesday, May the 14th, and we have a full one-day seminar event with David Cox from CIBC Wood Gundy. We're hosting the event. This event has nothing to do with his work at CIBC. This is more an educational webinar that we've decided, or seminar rather, that we've decided to put on to share some ideas with the community. So I hope to see you there. It's going to be a really, really interesting event. Good trading, good investing. Don't forget to wish all the ladies in your life a happy Mother's Day tomorrow, and we'll look forward to seeing you at the next update. All the best.